Why 90% of crypto investors lose money. UK and USA reality. What if I told you? Most people don't lose money in crypto because crypto is risky. They lose money because they behave badly. Not because they're stupid. Not because the market is rigged. But because they repeat the same 4 mistakes again and again. And here's the scary part. If you're investing in crypto right now, there's a high chance you remaking at least one of these mistakes without realizing it. Stay till the end, because mistake number 4 is the one that destroys portfolios the fastest, especially in the UK and USA. Before we start, a quick disclaimer. This video is for educational purposes only. I am not a financial advisor, and this is not financial advice. Crypto investments are volatile and risky. Always do your own research and consult a licensed financial professional before making any investment decisions. Alright, let's get into it. Crypto has created millionaires. But it has also wiped out millions of ordinary investors. In the UK and USA, most people enter crypto with no plan, no rules, and no emotional control. They treat investing like gambling, and the market treats them accordingly. Let's break down the 4 biggest reasons why most crypto investors lose money. Mistake number 1: overtrading. Overtrading is the number 1 portfolio killer in crypto. It looks like this: buying and selling every day, jumping between coins, chasing quick profits, and watching charts all night. Most beginners believe, if I trade more, I'll make more. Reality. The more you trade, the more you pay fees, make emotional decisions, and enter bad trades. Professional traders make fewer, better decisions. Amateurs make more decisions and lose more money. In crypto, doing nothing is often smarter than doing something. Pro tip: if you don't have a written strategy, clear entry, and exit rules, and risk management, then you're not trading, you're reacting. Mistake number 2: no stop loss. This is where most portfolios die. A stop loss is a rule that says, if this trade goes wrong, I exit here. Most beginners don't use one. Why? Because they think, it'll come back, I'll wait a little longer, or I don't want to lock in a loss. And that's how a 5% loss becomes 20%. A 20% loss becomes 70%, and a small mistake becomes a disaster. Markets don't care about your feelings. Hope is not risk management. Pro tip: smart investors don't aim to win every trade. They aim to survive bad trades. Because if you protect your downside, the upside takes care of itself. Mistake number 3: following influencers blindly. This one is brutal, especially in crypto. Someone on YouTube, TikTok, or X says, this coin will 10x, don't miss this next gem, or institutions are buying this. So people FOMO in. But here's the truth. Influencers often buy before they post. They profit from your attention, and some are paid to promote tokens. By the time you hear about it, you're usually exit liquidity. UK and USA reality: most crypto promotions are not regulated like stocks. That means less transparency, more manipulation, and higher risk for retail investors. If someone guarantees profits, that's your cue to run. Pro tip: instead of asking, who is talking about this coin, ask, what problem does this coin actually solve? If you can't explain it in one sentence, don't invest. Mistake number 4: confusing long-term, investing with meme coins. This mistake destroys people emotionally and financially. Many investors say, "I'm in this for the long term." But their portfolio says otherwise. They hold meme coins, hype tokens, and projects with no real use. Then when prices crash, they panic. Reality check. Long-term investing works best with strong fundamentals, real use cases, and long-term adoption. Meme coins are not investments. They are speculation. There's nothing wrong with speculation. But confusing it with investing is where people lose everything. Let's flip the script. Smart investors invest money they can afford to lose. Use stop losses or position sizing. Ignore daily noise and think in years, not weeks. They don't chase pumps. They build positions. They don't need to win big. They need to avoid blowing up. If you're in the UK or USA, understand tax rules on crypto, track every transaction. Don't overtrade, and focus on regulated exchanges. Crypto profits are great. Unexpected tax bills are not. Crypto isn't a shortcut to wealth. It's a tool. Used with discipline, it can grow wealth. Used emotionally, it will destroy it. Remember, overtrading kills accounts. No stop loss kills confidence. Influencers kill logic, and meme coins kill patience. If you avoid these mistakes, you're already ahead of 90% of investors. If this video helped you, like it, subscribe for real, no-hyped finance content. And comment, long term, if you're here to build, not gamble. See you in the next one.